G'day guys, Seeney here, and welcome to another episode on the Australian Wealth Channel. And in this episode, we're going to be talking about why being a saver is being a loser. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Helps to get these videos out to more people. Now, it's a pretty controversial topic that I've put for this video, you know. Saving is for losers. And, you know, it's a really unfortunate time in history to be saying something like this, because I think saving a lot of money is actually really good. Believe it or not, contrary to the title. You know, I think it's really important to live below your means, save heaps of money. But what I'm talking about more specifically is saving and putting your money in the bank. Now, what we've seen very recently due to a lot of issues in the economy is that interest rates have been dropped drastically to try and push growth and try and really initiate growth so that we don't go into a recession any worse than we already have. So the Reserve Bank here in Australia has actually dropped their cash rate down to 0.1%. So that means that it is incredibly cheap for banks to borrow money. And of course, it's incredibly cheap for banks to borrow money. That means that if you're going to deposit money in a bank, they're not going to give you a very high interest rate on that money. So I just wanted to delve into some of these rates and then explain why this is actually a really
terrible thing for anyone that's a saver, and it gets way worse than what you would think on the surface.
So I did a little bit of research and had a look at some of the deposit rates here in Australia. And the best ones that I've seen are 0.4%, 0.35%, and 0.25%. It's not even 1%, it's not even half of a percent. You know what it is? It's embarrassing. It's so low. So when the interest rates are so low, it means that when you put money in the bank, you're getting an absolute fraction of a return on that. You know, it's incredible. One thing is though, I noticed that Westpac has actually offered a savings account of 3%. If you're a young person between 18 and 29, if you use their debit card 5 times a month, I believe, then you can get a savings rate of 3%, which is significantly higher than that 0.4, which is actually the Westpac base rate. So that is one option that some people might be able to use. But for the general population, the deposit rates are just a joke. And you think, okay, well, maybe if I put my money in a term deposit, you know, I lock up my money with the bank, maybe I might get a little bit better return there. And you know what? You're right. You will get a slightly better return, but it is also very embarrassing.
Are you not ashamed of yourself? Are you not embarrassed? This is really embarrassing.
Now, these are some of the best rates that I've found for term deposits. So you can lock your money up for certain periods of time. Obviously, the longer you lock it up for, you're going to get a better interest rate on that. So a 1-year term deposit at the moment, the best rate that I've found in Australia, if you lock up your money for a year with the bank, you're getting 0.99%. Not even 1%. 2-year term deposit, you're getting 1.2% every single year, which is incredibly low. So you think, oh, well, you know, it's safe. I can get to keep some of my money and just make a little bit on top of it. What's so bad about saving? Well, this is where it gets worse. If we have a look at inflation rates, we're going to see something that's actually quite dramatic. So for anyone that doesn't know, inflation is basically the process where the purchasing power of your money is eroded every single year. And we see that reserve banks around the world tend to want to target a 2% inflation rate because that helps to stimulate growth and investment. So every single year, your money is losing value. $10 today is going to be worth much more than $10 in 20 years. You know, it's just insane. And this has been happening for a very long time now. So what we are seeing this particular year in the US, inflation is going to be roughly 2.4%, it's estimated. Obviously, we're not at the end of the year yet, so we don't know. In Australia, the inflation rate is anticipated to be 1.74% by the end of the year. So what we're seeing here is that the purchasing power of your money is getting eroded. The banks, whether you get a deposit rate or a term deposit, your money is actually having less purchasing power over time. You are literally losing money by leaving it in the bank. in a savings account or in a term deposit. You are literally losing money in real terms. So I cannot make that point clear enough. And that's why I have the title of this video, Saving is for Losers. And unfortunately, it's such a shame. So what is it that you can do? So one option is government bonds, but they're no better. They're embarrassingly low. In fact, the 2-year bond for the Australian government, if you're buying bonds from the Australian government, the return is 0.03%. So that one's no good. You might as well throw your money in the fire. So how is it that you get a return today? So unfortunately, it seems to be that the only way to get a return today is to take on some risk. And that means investing in things such as stocks, real estate, or even crypto. These have been the 3 best performing asset classes of the last 20 to 25 years. It's just undeniable. So I'm not saying that you should take on any risk if you don't want to, but this is what the previous data has suggested for us here in Australia and the rest of the world. So it seems to be the only way to currently beat inflation. So you're not going backwards and you're actually going forwards. So not financial advice, of course, but the vast majority of my investing is in stocks and real estate. So that's what I'm going to speak to. Obviously, crypto is highly volatile. You can make and lose a lot of money. If you want to have a go at that, then go for your life. So let's talk about stocks. So the S&P 500 index fund has returned an average of about 8% year on year. So this beats inflation in the long term. In the short term, anything can happen, obviously. You know, we could see a negative return for years on the S&P 500. We just don't know. But based on past performance over a very long period of time, that is what we've seen. You know, you could have invested in the S&P 500 and in any period of time, and if you held it and reinvested your dividends for 20 years, there's no chance of you losing money. That's literally what history has showed us if you've held for over 20 years. The market has always gone up over time. Now, with real estate in Australia for the last 25 years, we've seen an annual growth rate of 6.8% for houses and 5.9% for units. So this is actually a really fantastic return, especially if you've been using leverage from the bank and taking on loans for a mortgage. If you've been in property for the last 25 years, you have done incredibly well. We've seen some amazing growth in the Australian property market, and I personally believe we're going to see that in the future. You know, I don't know, obviously, but you know, with the immigration tap that's going to get turned back on once we get through this current issue, then it's going to drive more and more demand for property. And with the supply issue, construction shutdowns going on, it's only going to drive the prices up even higher. So personally for me, I'm continuing to invest in real estate, but you know, it's your money, you got to do your own thing with it. So it is the decision for you to make. Personally, I want a return on my money. I don't want to just set it on fire and lose purchasing power every single year. So for me, I invest in stocks and real estate. So it's really worth thinking about where do you want to be in 20 years time? Where do you want to be in 30 years time? Do you want to be roughly the same place with your savings, or do you want your money working for you? You know, it's a decision you have to make yourself after a lot of research. But thank you so much for watching. I hope you guys found this insight interesting. Inflation and all of these things, you know, it's one of those little hidden taxes that work away on people that most people don't even notice until it's too late, and you wonder why milk's costing so much compared to what it did 20 years ago. So keep an eye on that. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So my name is Seeney. Please leave me a comment for the algorithm. I want to hear what you guys have to say about this particular topic. So thank you so much for watching, and we'll see you later.